Did you know? An investment in stocks is actually two investments, one in long-term growth or price appreciation, and the other in cash flow or dividends. To get one, you had to own the other. Until now. For the first time, Mataurus Advisors is offering choice through two innovative funds listed on the NYSE Arro, IDIV and XDIV. IDIV and XDIV allow you to customize your exposure to an entire broad-based index's potential dividend cash flow and/or potential longer-term growth. You can use the funds separately or hold a combination of both for a more tailored approach. IDIV and XDIV allow investors to balance two separate needs: current cash flow and overall longer-term market exposure. By separating the entire index into these components, IDIV and XDIV can help investors pursue their unique goals without picking individual stocks. IDIV, the dividend ETF, seeks to provide 10 years of index dividend cash flow without sector concentration by investing in U.S. Treasuries and dividend futures. It can serve as a dividend growth investment and intends to provide monthly cash distributions based on the actual dividends paid on all the stocks in an index, all with no direct underlying stock price exposure. XDIV, the growth ETF, seeks to provide long-term price appreciation through 10 years of index price returns by holding positions in index and dividend futures and U.S. Treasuries. XDIV allows investors to gain the index's stock exposure at a discount, but without using leverage. These ETFs can serve as tools to build your custom portfolio. Want more potential dividend cash flow? Just increase your portfolio allocation to IDIV. Prefer to increase your equity market exposure? You can dial up a higher proportion of XDIV. Through IDIV and XDIV, Mataurus Advisors allows investors to express investment preferences without changing their passive index strategy. Index investing has never been this flexible. IDIV and XDIV. Your money, your choice. Visit www.mataurus.com or dial 866-395-0079 to learn more. This material must be preceded or accompanied by a prospectus. The funds are not investment companies registered under the Investment Company Act of 1940 and are not afforded its protections. Investing in them involves risk, including possible loss of principal. The funds primarily invest in futures, which can be volatile. Even a small movement in market prices could cause large losses. There is no guarantee that distributions will be made, or that there will be an active trading market for your shares. There are also restrictions on redemptions that may affect your ability to withdraw your participation in the funds. The funds have a limited operating history with which to evaluate them. Potential fund investors should review the prospectus closely for additional information about the risks associated with investing in them.